On today's hot sheet, I'm discussing a report on starter homes and house price indices from Case-Shiller and FHFA. Today is Tuesday, August 27th, 2024. I am Byron Lazine, and the hot sheet starts now. Okay, here we are on Tuesday. Not a terribly insane Monday, which is a good thing. We had, after the Friday Jerome Powell speech over in Jackson Hole, we had a stock market yesterday that set a new record. The Dow set an all-time high yesterday. So as we were looking for reactions of what the market would do after the Jerome Powell guarantee that we're going to see this cut in September, we saw that the Dow has now reached a new all-time high. The 10-year seems to be moving up today. We'll get to that a little bit later, but not really big movements other than Dow setting a new all-time high, slipping so far right now as the markets just open up. Okay. We're going to get into a couple reports here. Case-Shiller obviously came out this morning, just a half hour ago. Case-Shiller and FHFA both came out. That's a rear view mirror, obviously lagging data, but it is the gold standard, Case-Shiller, on the real estate industry. So we're going to take a look at that. But first, let's take a look at this Redfin report. Redfin reporting that starter homes have emerged as a bright spot as mortgage rates are now finally settling near the 15th month low. Remember, you got to go back to basically May of last year to get this low on the 30-year fix, which even ticked down a little bit yesterday. I expect that to tick back up today as we are seeing what's going on with the 10-year. Okay. All right. So getting into this Redfin report, all of the charts obviously will be available for BAMX members inside of BAMX. Use code HOT to get access to all of our hot sheet show notes each and every single day, which so many of you are using in your follow-up, as well as all of the charts ready and accessible for you to use in your marketing. Okay, the pending starter home sales grew by 10% in July year over year. That's while other price brackets fell. So pending home sales up 10.2% for starter homes, while the middle tier and the upper tier homes both fell. We saw the pending home sales yesterday when we took a look over the last couple days. Pending home sales are just 2% above, according to Altos. Pending home sales just 2% above last year's mark, and existing home sales now, according to NAR, we looked at yesterday, now 3.95 million seasonally adjusted. So sales are way down, but starter homes, one category that is showing an increase. Okay. The median price for U.S. starter home climbed to $250,000 in July, but price growth was slower than for other price brackets. Okay. Starter home buyers are moving off the sidelines as mortgage rates fall and inventory rises. So here's showing you the 10.2% increase on pending sales of starter homes, which is up double digits versus middle and upper. You might be in a market right now where you're shaking your head like, I just can't even believe that. Okay. This is obviously looking at national. We're going to break down the regions here in just a little bit. This is, again, according to the Redfin analysis. What they did here was they divided all the U.S. homes into buckets based on Redfin estimates of market values as of August of this year. Okay. So they took everything on their portal, divided it into buckets based on the values that they have currently. And it's focused on homes whose sale price fell into the 5th to 35th percentile. Okay. 5th to 35th percentile. And that's how Redfin will define a starter home. Their price tier data is calculated in a rolling 3-month period, which is the report focusing on May through July. So what we're looking at now is all focused on really the summer season, May through July. Pending sales of middle price homes where the sale price was the 35th to 65th percentile of the market fell 6.5% in July compared to a year earlier, while upper price 65th through 95 percentile fell even more. Here we go. So here's your home value percentile. Again, starter 5 to 35. You see middle, upper, and then the luxury would be the top 5%. Okay. Sale price year over year for starters up 4.2%, middle up 4.6, upper 5%. Look at luxury up 7.9% on the sale price, the most of any category. Median list price year over year has gone up the most on starter homes, 8.4%. And so median list price versus sale price, you're seeing some resistance there. Median list price is up 8.4%, but the sale price is only up 4.2. Middle tier homes up 6.8% on list price, 6.8 on upper tier homes for list price, and then 8% on luxury. Luxury homes on the median list price increase year over year and the sale price are almost identical. Pending home sales down in every category except for starter. Homes sold year over year. Total homes. So this is what's interesting. The pending sales are up over this 3-month time period, but actual sales year over year down, okay, from July to July, even in the starter category, down 0.6%. Homes sold are down in middle, upper, and luxury categories as well. So actually getting to the closing table is a whole nother story. We're seeing cancellations move up, cancellations in starter homes. I think starter homes are more vulnerable. You get to a luxury negotiation, oftentimes, we're talking about a newer product, a much more, higher end maintenance. And, there's not a lot of fear sometimes on those luxury homes if they've been well maintained, for sure. And when it's a starter home, you might have some DIY stuff going on. You might have some older elements of the house. You might have original features, and you can get into an inspection and you can have some issues there, which create a cancellation. Also, just the final numbers being crunched for a first-time homebuyer, starter homebuyer in this market can freak them out a little bit. And so that's where you also see some cancellations as well. Active listings, though, look at this. Active listings for starter homes are up 19%. That's the 250,000 range. So inventory is growing on the starter home market across the country. I know some people in the Northeast are saying, when will that come to the Northeast? 4.1% in the middle tier homes, upper 1.6, and luxury coming in at 9% increase on inventory. Okay, so there's your look at each category for this Redfin analysis. Starter home sales versus pending sales. So pending sales are again outpacing actual sales. And this is because of those cancellations. Like, this is a chart if I'm listing a starter home and you can tell that there's going to be some issues and they're trying to go aspirational pricing. Like, I'm going to show them the difference between pending sales and actual sales and some of the repercussions of getting something pending and then having to go back on the market. Okay. We would rather list it maybe at market or below market and get the competition so we have more options of getting the best buyer. It's just a strategy I think that works in the starter homes right now, so that you can have the certainty of the closing. You don't want to go back on the market. You never want to go back on the market after the fact. There's a stain on the listing. It creates a loss in value oftentimes. And so you want to go out right. You don't want to be one of those pendings that had to come off. And that's why you see a difference in pendings and sales, because you've got some cancellations there. Okay. Look at the inventory chart. Again, starter homes just completely outpacing middle and upper tier homes. And then looking at some regional differences here. Starter home prices fall actually in Texas, Florida metros, as you're seeing a huge increase in inventory in those areas. So they saw some of the biggest declines in home prices in July year over year. The 5 metros we saw the biggest decline in price were Austin, and they have an increase in 17% active listings. San Antonio, 50% increase in active listings. West Palm saw a loss in sale price, 34% increase in active listings. Fort Lauderdale has a 47.5% increase in active listings. In Dallas, where they have a 38.5% increase in active listings. Going further down the report and taking a look specifically at some of the 50 most populous regions. You can drop in the live chat here if there's a region that you're particularly curious about. I'll go through some of the highlights here. Anaheim, you have a median sale price of 7.1%. Homes sold year over year down just a tick. Pending home sales right now year over year is up 12%. Active listings up 15%. New listings up 26%. And Atlanta coming in median sale price of $265,000. We see median sale price there being up 1.96%. And this is just the starter home category. Okay. So this is just for starter homes in the 50 most populous areas. Homes sold in Atlanta is down 4.1%. So that's pending home sales also down 7.5%. That's opposite of what's going on nationally. Active listings is only up 2.6. So they don't have the inventory there on starter homes that you're seeing in other parts, right? Where you look at, again, Austin's up 17%, or Anaheim's up 15%, or Baltimore's up 15%. You're going to see pending sales increase, but it's only up 3.8%. Okay. So active listings are up 15% in Baltimore. Pending sales only have gone up 3.8%. Okay. Kristen says she hasn't seen this much inventory in San Antonio since the early 2000s. Let's take a look at San Antonio in particular. I know we just mentioned it above, but you've got 36 days on market. It's one of the biggest numbers here on the entire chart. You've also got, you do have an increase in these starter home sales, but the inventory, I'm just going to go back, make sure, or no, pending sales is up. Okay, pending sales is up 26%, but inventory is up 50%. Let's make sure I got the right number there. Yeah, active listings in San Antonio up 50.2%. So the pending sales are happening, but they're happening at half the rate of the inventory increase. Okay, and the 36 days on market, again, one of the biggest. You see Riverside, California here at 41, Pittsburgh, Pennsylvania at 47, Phoenix coming in at 50. That's a big number there from what we've seen in recent years. Philadelphia coming in at 44, Orlando at 34 days on market. Look at West Palm Beach in Florida. You're looking at 77 days on market in West Palm, which just a couple of years ago, one of the hottest housing markets you could find. Pending home sales are actually down, while active listings are up 34%. Pending home sales for starter homes are down 11.2% in West Palm. So we're definitely seeing more in the Sunbelt states of properties sitting for longer and inventory accumulating. Kristen also says about San Antonio with the largest amount of new builds at the lowest price. Okay, $325,000 at the median sale price, and there is an abundance of that inventory because of how much they build in places like San Antonio, or how much they're building in South Florida. In areas like the Northeast, you're not seeing this really at all because of how few new builds happen there. Those are much smaller builders. National home builders stay out of the Northeast, generally speaking, outside of maybe a few neighborhoods here and there. Okay. Looks like Beth is over at the Tom Ferry Summit. Beth, oh, you can't hear me. You're watching, but you can't hear because you're in the room. I got you. Okay. So thank you, Beth. Appreciate that. It's a shame that you can't hear me. This is, I think, the first Tom Ferry Summit that I haven't attended in about a decade. So that's pretty crazy. But I hope you have fun there. Michael says record number of active listings over 900,000 in my Geo Farm, which is the third largest subdivision in Harris County. Since 2019, only once have we hit north of 50, and we are close to 60 as of today. So now not only pre-pandemic, but pre-2019 levels for Michael in Harris County. Expect that story to continue here as we go through the rest of the year, meaning days on market, inventory, accumulation of inventory. And then as we get into, I don't know, how deep this, Fed cut is going to go later on in the winter, and we start gearing up into the spring. Let's just all recall what happened to assets the last time we stimulated the economy, right? So I keep saying, hey, this winter, this end of the year, the election season is the best time to be a buyer right now. I think you're going to get the best negotiation. Yeah, that interest rate may not be quite as low as it might be, next year at this time. The interest rate will probably, with almost all levels of certainty, be lower at this point next year than this year. Okay. But the last time the Fed stimulated the economy, starting in just before mid 2020, just after March of 2020, in March, really, when the Fed started stimulating, what happened 6 months later? What happened 8 months later? Asset prices went through the roof, but assets were also something that people were rushing towards to own. Okay, so we might see that same run up sometime next year, talking spring of next year on assets. Michael's market there, that inventory might shrink up come the spring if the cuts are deep enough, if the stimulus that the Fed's saying that now they're taking that pivot into, depending on how that goes. And a lot of it's going to be, obviously reliant on what happens with this job market. Okay. Let's move over to Case-Shiller. This is obviously lagging data. If you want more on the starter home report, we'll link everything up. We'll put the charts available for you in BAMX. BAMX members get access to all the charts every single day, as well as these hot sheet show notes on every segment that I do on the hot sheet every single day. So many of you are using the charts and the sources, like on this Case-Shiller example here, we've got 9 charts that you're able to download inside of BAMX. You can copy and paste, use this in your email strategy, your follow-up, your texting strategies, whatever that may be. You can get into BAMX by using code HOT right now to get a discount off of BAMX and join the community where every single month we drop a new course. I'm doing the course for September, or it's, the course that we're releasing in September. I am doing the instruction on. It's all about VAs. So we drop a new course every single month. We drop bi-weekly live streams called Office Hours. We have our Facebook community. And then every single Friday in BAMX, we deliver done for you content, 3 or 4 social media posts directly from the information that we're going over right here, ready for you to, add a little flavor to and post, as well as email scripts, blog scripts, and video scripts, all done for you on a drop every single Friday. So BAMX members, when you see the price and you get all that value, you're going to be like, what in the world? I got to do this right now. Use code HOT to get in there. All right. S&P CoreLogic Case-Shiller indices. So this report is for June 2024. You might be thinking, well, geez, it's Labor Day weekend coming up this weekend. We're about to be in September. But remember, Case-Shiller is the gold standard for a reason. They can't get it wrong. They wait 3 months before they release it. So how could they get it wrong? So as for June, they reveal a 5.4% annual gain in U.S. home prices. New York, San Diego, and Las Vegas saw the biggest increases. Okay. Here's your CoreLogic Case-Shiller graph here. That 5.4%, you might be saying, wait, the chart down there looks like it's heading down. Yes, home prices are decelerating, even though 5.4% is a huge number historically on home price appreciation, and historically based on all of the Case-Shiller numbers. We are still now looking at a deceleration, okay, down from topping out at 8%, 6%, that range earlier in the year. Okay. So here's one of my, let's take a look here. Here it is. Here's the 2000. Here's a great look at what is going to happen with asset prices as we continue to move forward. All right. This is off of table 1 here in the Case-Shiller. All right. 2006 peak national, peaked out at 184. All right. Currently, national is at a 325. Okay. So from the trough of 2012, we're up 142%. From the peak of 2006, we're up 76%. Okay. So this is when we had one housing bust in the last 40, 50 years of the great financial crisis to today. Okay, the 20 city composite shows a 206 peak in 2006. Now we're at 335. Okay, that peak could be even greater in the future as the economy gets stimulated and people rush towards assets again. 226 on the 2006 peak on the 10 city, 352 currently. Okay, and that's just based on that indice. Okay, on this Case-Shiller indice. Here are the year-over-year changes for the 20 city composite according to Case-Shiller. According to Case-Shiller, you've got a national, again, increase of 5.4%. That is decelerating down right now as we, as we start to move through the year. I do expect more of that downward trend. You've got 6.5% on the composite 20 city and 7.4% on the composite 10 city. Some of the places that stand out, again, New York in the lead here with Las Vegas, as well as I believe it was San Diego at 8.7. Those are your top three. You see Chicago in at 7%, Boston at 6.6. Some others that stand out, Los Angeles coming in at 8.2, Detroit at 7%. Seattle at 6.7 and Washington State at 6%. I believe that's Washington State. I don't see a DC there, so I'm going to go with DC. That's got to be DC. Sorry, it's not going to be a state. It's going to be DC. Just put DC in there. Make it easy on us. Some of the low levels were Portland at 0.8%, as well as Denver coming in at 1.9%. Prices in Dallas with their accumulation inventory still up at 2.3%. So there's your 20 city composite on Case-Shiller. Case-Shiller's press release that was just released this morning says the leading measure of U.S. home prices reached a new all-time high with a decelerating trend for June 2024. Okay. More than 27 years of history, Case-Shiller. So the 5.4% gain is down from a 5.9% annual gain the previous month. And so there you go on your Case-Shiller update. Let's move over to FHFA, who also released their quarterly report here just this morning, also at 9 a.m. FHFA House Price Index quarterly report. This is for 2024 quarter 2 and June 2024. Okay. Here is the news release released again this morning. Federal Housing Finance Agency news release. House prices rise 5.7% over the last year, up 0.9% from the first quarter. U.S. home prices rose 5.7% between second quarter of 2023 and second quarter of 2024. The house prices were up 0.9% compared to the first quarter. Seasonally adjusted monthly index for June was down 0.1% from May. So FHFA showing a deceleration May to June, similar to the deceleration that we just spoke about with Case-Shiller. U.S. home prices saw the third consecutive slowdown in quarterly growth. So we're still growing. That growth is getting slower. The deputy director for FHFA's Division of Research and Statistics said in this release, the slower pace of appreciation as of June end was likely due to higher inventory of homes for sale, as well as those elevated mortgage rates. Okay. Nationally, the U.S. housing market has experienced positive annual appreciation each quarter since the start of 2012. Okay. Positive appreciation. We're talking about deceleration in appreciation, but we're still talking about homes that are going up. This is called the compounding effect of your appreciation. Okay. We haven't seen a negative quarter since before 2012. That's astonishing. That is something that I might put at the top of an email newsletter. I might put that right there at the top, especially for my buyer list who believe home prices are going to come. Well, when are they going to come down? And if we stimulate the economy like we need to, because we need to protect jobs, then what is going to happen to those following quarters, that those prices are going to continue to go up. House prices rose in 50 states, according to FHFA, in the District of Columbia between second quarter of 23 and second quarter of 24. 5 states with the highest annual appreciation: Vermont, 13.4%, West Virginia at 12.3%, Rhode Island at 10.1%, Delaware at 10%, and Jersey at 9.9%. And so here we go. Let's take a look at some of, I love some of the ways they break this down. I mean, here's one to show you what deceleration looks like, obviously, from, the gains that we were getting. We're not going to get 17% gains every single year. The 23, when we looked year over year, quarter 2, 22 to quarter 3, 23, you had 3.2%. Now we're at 5.7%. Still on a deceleration trend if you look where we were for quarter 1, which this chart does not show. But these are really healthy gains going all the way back. 5.7% would be more healthy and more normal than most years on this chart. Home price, let's go. These are all fine, but let me go to this one, my favorite chart to show anyone who believes home prices are due to crash. Okay, in the last 35 years, they've crashed once. That was a great financial crisis. That was a global meltdown. That was a mortgage crisis that we're not anywhere close to. You couple this with the fact, hey, home prices go up and to the right every single year. And you couple that with the fact that we are nowhere near. Let me go here to, let me go to my, I think I retweeted this morning on X. Let's see. Let's go to X. Logan Motoshami put up a beautiful, he's debating with people on X right now, which can obviously create some mental fatigue, with how bright some of these people are when it comes to housing. There are folks on the internet, and this is what you got to deal with when you're educating people and trying to close that knowledge gap between your customers and your clients. Okay. This is what you're dealing with right now, is that people are reading this stuff on the internet, and they read the same people every year. The housing market is about to crash. These are just people who are still licking their wounds from 2000. I've got this up, Bobby. You can drop that off if you want, or there you go. Thank you. So inventory in 2007, for everybody that's comparing it, and here's the quote tweet. Eric Stearns at Real Pelican 22 says, please, you are comparing today to 2010 and acting like it's case closed. Come on, man. Sounds like somebody who just got kicked out of office. Come on, man. Let's check back in 2026 and compare that to 2010. In the retro view of things, the market is just getting to the start of 2007. It took 6 years to hit the bottom from the 2006 peak. And so here's Logan just setting this guy straight. Well, inventory was at 4 million. Active inventory was at 4 million in 2007. Now, this number, we look at the Altos research when we talk about active on Mondays, which says we're at 700, just over 700,000 active listings, because Altos does the job that I prefer, which is taking the pendings out. When we're looking at the 1.133 million right here, this is doing one of two things. This is either showing pendings, or this is showing new home sales included in it. Okay. So inventory per this metric in 2007 was at 4 million. Today at 1.133 total. Okay. Loan to values was over 80% in 2008. Loan to values under 50 today. And so Logan reminds this guy, you're dancing with a ghost who left you in 2008, and she isn't coming back. You'll have to let her go. A lot of these doom and gloomers in the housing market are just like, they're just waiting for 2000. I mean, they've been waiting forever. They've been calling it forever. and it just isn't coming. I mean, when we look at this every single quarter from FHFA, I mean, 35 years, it's you can't miss. Can't miss on investing in real estate and having a fixed cost on your home prices. Okay, here's the 12-month house prices prior year versus most recent year by region. The Pacific is up 0.5% down last year to 3% up, 1.4% down for Mountain, up 3.3. West North Central is down a tick from 5 to 4.6. West South Central up from 1.7 to 2.7. East North Central up to 7.2 from 5.7. East South Central up to 6.1 from 3.8. New England is just down a tick from 6.7 to 6.3. Middle Atlantic up from 5 to 7.7, and South Atlantic up from 4.3 to 5.7. Okay. There you go. A lot of data in the FHFA quarterly shows one thing: home prices remain, very strong. And again, I just think when we look at what's the Fed going to do, we could see home prices get even stronger next year, which is why I think there's a buying opportunity right now, despite what appears to be, really high prices. Here are some of the metro areas, according to FHFA, that have done the best. Syracuse year over year, 14.2. Honolulu, then Miami, Akron, Newark, New York coming in at number 6. Wichita, Las Vegas, Lake County, Rochester. That makes up your top 10, all at or near double digits. Providence, New Haven / Milford is 11 and 12 at 9.1 each. Nassau County, also 9.1. Camden, New Jersey, Wilmington, Delaware. There's your top 15. Then you got Anaheim, Irvine, Charleston, Greenville, South Carolina, San Diego, and Richmond for your top 20 here. And you got 100 of the, here's the top 100 metro area. The only 4 in the negatives: New Orleans, Oakland, Cape Coral, Fort Myers, Florida, just north of where I am right now, and Austin, Texas. Those are the only 4 in the negatives. Baton Rouge hanging on with a 1% tick up there. Now, quarter over quarter, you have some others in negatives. You got West Palm, you have Phoenix, Louisville, Salt Lake flat quarter over quarter. Boise is down quarter over quarter. Columbia, El Paso's flat. Baltimore down. Sacramento, Jacksonville, Raleigh, Minneapolis, Oklahoma City, Portland, Memphis, and Fort Worth. Okay, down quarter over quarter. That's a really good chart for anybody interested. Don't love the looks of this chart today. For whatever reason, 10-year is up 3.86. We've been kind of hovering around that 3.8. Now we're getting closer to 3.9. Okay. 30-year fix yesterday came in at 6.43, just a tick under where we ended on Friday at the 6.44 level. Again, the weekly last week came in at 6.46. So we're hanging out below 6.5. Hopefully remain there today with 10-year increasing. The Fed watch coming in at 70+% chance that it's only a quarter point cut here in September. Less than a 30% chance that it is indeed a half a point. Okay, a couple of things to make sure you're aware of. Tomorrow, we have a BAM webinar. Okay, this webinar is going to be with Eric, the broke agent, as well as Emma Pace along with him. 3 simple video techniques to get your leads to contact you. Okay, the quick conversion strategy, the unghosted strategy, and the health check strategy. Those are what you'll walk away with. It's absolutely free. I think, Bobby, you can put that link down below. Free BAM webinar tomorrow at 3 p.m. Eastern time. Also tomorrow, BAM Mania tomorrow, Wednesday night at midnight. BAM Mania ticket prices will go up to the next level of pricing. Okay. If you're a BAMX member, remember you get 25% off. Lock that in now before it goes up to next level pricing. If you're not a BAMX member, lock in your price as well. BAM Mania on October the 18th for general admission, October 17th and 18th for our VIP attendees, Bam Mania in Las Vegas, October 17th and 18th at Circa. We're going to be doing some fun stuff at Stadium Swim, as well as the Legacy Club out there. Not just about all the speakers that you will hear from, but it's about the people that you meet and the time that you're going to be able to spend with them. BAMmania.com. Lock in now before Wednesday at midnight. Prices take off to the next tier pricing strategy. Reminder, VIPs will be selling out first, and then we'll be just left with general admission. Hope to see you guys there enjoying the Agent of Change movement out in Las Vegas in October. All right, there's your hot sheet here for the week. Later on today, we'll be posting a new Real Word podcast here on the main channel over in the video tab, not here on the live tab. Make sure if you get value from the YouTube channel, you go ahead and hit thumbs up on videos like this. It helps it reach more people, as well as going and pressing subscribe. All right, we'll see you guys over there on the Real Word Pod later today. Until then, toodaloo.